My name is Henry Robinson. I'm the loan officer here at Greater Alliance Federal Credit Union. And we're here today to go over some key points on the mortgage industry and how to purchase and the different products that are available for mortgages. We have the normal conventional mortgages. We also have FHA, which is a Federal Housing Administration loan backed by the government. We also do VA. It gives the veterans opportunity to purchase a home at 100% financing. And we also do USDA for members that want to purchase 100% in rural areas, kind of like farmland areas that, again, most of PA have those particular products as well. So we have a vast variety of products that's out there that's pretty much for all the consumers. The most popular one is the conventional, the 30-year fix, because that gives members an opportunity to put the mortgage payment affordable monthly, with the option to pay more. If you want to pay more towards principal balance, you can, but the 30-year fix is the most popular. Very competitive. We stay with current market rates. We're right there, if not better than most investors out there. The good thing about it is we don't have any fees, which is unheard of today. Most lenders do charge processing fees, underwriter fees, points of that nature. We have zero fees to our members. Typically, closing costs, out-of-pocket expenses, your title fees, appraisal. If there's a septic, there's septic inspection fees. So pretty much all your fees are third-party fees. Again, the credit union doesn't have any fees. Yes, most of these fees are upfront, out-of-pocket, and it can vary pertaining purchase price, dwelling type. So it just depends. Absolutely. Highly recommended to obtain a pre-approval or pre-qualification. We will assist with completing the application online. The difference between the pre-approval versus pre-qualification is when you complete the application online, if we run it through the system, get it approved, and we will give you a pre-qualification letter based on the information that you submit on the application without verifying anything. The difference is with the pre-approval, we're going to take your income docs, assets, verify everything with an underwriter. That way, when you receive actual pre-approval, it's more concrete and there are no surprises down the road. So FHA is abbreviated meaning Federal Housing Administration loan. It's a loan that's backed by the government that gives members an opportunity with mediocre credit or good credit to purchase a home. A little different from conventional, where when you're looking at an FHA, it also gives you an opportunity to put less down on multi-units opposed to conventional. The Federal Housing Administration loan is a really good loan that gives a vast variety of members an opportunity to purchase a home. So a lot of first-time home buyers are a little edgy when it comes to making that leap of faith. And because of some of the stories that they hear, the fees, costs, the whole 9 yards, a lot of them don't know that the minimum down payment required is only 3%. There are some programs out there that can assist with down payment assistance or closing costs and down payment. And so basically we just have to go through the process of completing the application and getting the members approved, first-time home buyer approved based on their income and assets. So it's really somewhat of an easy and a no-brainer process. We just have to break that ice and let members know that it's really not all that bad in purchasing homes. We do it a little different than most lenders. I, as the loan officer, will pretty much stay involved throughout the whole process. From the application, throughout the processing. Now, I'm not a processor, I'm not an underwriter, but I do stay in touch with the processing team and underwriting team to make sure that the process goes accordingly and we reach the closing deadline. And that's the most key important, is closing on time. But the good thing about it is we kind of have that hold your hand approach from introducing you to a realtor to, again, the processing, underwriting, and making sure that we meet goals and deadlines. And it's really not, like I say, we're here to make the home buying process, it's supposed to be a comfortable and fun experience, and that's what we're here to do, to make it seamless as possible. The first step we take is we complete the application. Once we complete the application, we got the income tax to verify everything, make sure we have everything on the table. And then the next phase is to introduce you to a realtor. And then once you introduce you to a realtor, then you start the process of house hunting. And if you find a home that you like, put the offer in, if the offer is accepted, that's when your contract is drawn up, and that's when we start the actual process of going through the underwriting process to obtain the actual mortgage and put you in the home. The importance of getting pre-qualified is to get you past the shell shock, and to make sure that we can put you into a home that you can afford, and don't have you out there getting your hopes up high on a home that you may like but you can't afford because it's too pricey. Then that's our goal, is to stay within reality and to make sure that you are happy with the home that you're going to purchase and you can afford it. And that's the key. It's the bottom line, you don't want to waste your time as well. And that's what we're here for, to simplify that for you, so there are no surprises. So what documents you need to apply for a mortgage, depending on your occupation. If you're just a normal, just a W-2 employee, we would need 30-day pay stubs. We would need 2-year W-2s, and we would need your bank statements or 401k statements, whatever you're using for the down payment and closing costs for this transaction. If you're self-employed, it will need 2 years of your personal and business tax returns, along with your assets. What we'll do is we'll gather all that information throughout the pre-approval, throughout the application process. So once we gather all that information, and then we'll take a look at it, run it through our automated system, make sure we get you approved within what your income allows, and then we'll start the process of counseling. PMI is private mortgage insurance. So years ago, when homes were not as expensive as they are now, the minimum down payment to put down on a home is 20%. Now that homes have inflated and pretty much quadrupled, and so most people do not have 20% to put down. So PMI, which is an insurance company that covers the relationship between the lender and the insurance company. So it allows members to put less than 20% down. Because years ago, if you didn't have 20% down on the home, you couldn't buy a home. But now that homes are so expensive now, we have the opportunity to obtain private mortgage insurance so that you can purchase a home with less than 20% down. So DTI, which is your debt to income ratio, is your income versus your existing debt, as far as credit cards, car payments, whatever's the liability that's on your credit report, and how much we can get you approved for a mortgage, as far as principal and interest payment, taxes, insurance, and if it's a condo, association fees. So we factor all that into, take your debt, divide that into your income, and that'll give us a percentage of what your debt to income ratio is. Loan to value is how much your the loan amount is versus the value of your home. So if the home is valued at 100,000, you're putting 3% down. Your loan to value is 97%. From start to finish, how fast is the mortgage process from start to finish? Meaning, if you have a contract, if you've already been looking around, or if you have a contract and ready to get the ball rolling. So if you already have a contract, let's say you already been looking around, you have a purchase contract agreement and you're ready to get the ball rolling, that process is about 30 to 40 days. Because there's a lot of other moving parts that goes along with this, which is beyond our control, which is the appraisal, title, and of other types of inspection. So the average is about 35 to 40 days. It may be sooner, it just depends. The minimum credit score required is 620. And then obviously the better the score is, the better the rate you get, the cheaper the payment is, the more you can possibly get approved for. Well, if you're looking to purchase a home, set yourself up for a year from now, I recommend trying to keep all credit to the minimum, okay? Because obviously, what I mean by that is your liabilities as far as credit cards, card payments, more importantly, credit card, which is revolving debt. You want to keep those balances low as possible, because the lower the balances, the better credit score you get, and the more you can actually get approved for as well. So I recommend keeping everything to the minimum and having minimum debt as possible, which will allow you to get approved for, more properties. I'm Henry Robinson. I'm the loan officer, and I'm here to make this buying experience most pleasant as possible. Greater Alliance been here for over 87 years, and I've helped many members go through this experience. And this is one of the most biggest, largest purchases that you're going to have in a lifetime. So we want to make sure that this is a great and smooth and seamless opportunity that we put you through. So I recommend there's a couple of ways you can do this in reference to applying. You can go to the website yourself, and the application is online. You can also call me. I'll be more than happy to assist with you over the phone and get the application completed. We get your documentation in, and we'll get the process started. And so it's really not all that hard. We're not trying to, it's not rocket science. We're going to make this easy and seamless for us possible.